Lena, give me a howl. We're gonna look at some EOS today. Come on. Ow, ow! There you go. Give me one more howl. Ow, ow! Come on, give me one more. Ow, ow! There you go. My dog's really excited, guys. We're gonna trade some EOS today, okay? You guys want to hear her howl one more time? Ow, ow! There you go. Okay, guys, we are gonna go over some EOS, okay? So just to catch everybody up, this is wave 1. This is wave 2. Within wave 1, we've got our 5 subwaves in here. And then within wave 2, we have our A, B, C correction. I want to make note of this for you guys. First of all, you know, the news started happening a while ago. Okay, I want to make note of 2 things. 1, point A touched to around 0.5 Fibonacci. And then 2, that the second point C, whoops, if I can grab it, C, right here, ended right around, we can say, you know, 0.3 Fibonacci level for this one right there. And I also want to make a note that this one here actually took 1 day and 16 hours for this correction. Actually, we'll say 1 day, 15 hours, okay? We're also going to assume the exact same thing, that this one, it might actually take even longer than 1 day and 15 hours. Now, I'm sure people are really panicked right now, and they're like, oh no, this is going to go up. I'm going to miss my chance, guys. Everyone will probably think that right now. But an Elliot Wave trader does not panic because all the information is in the charts, guys. You guys want to see what an uptrend volume looks like? Look right here, guys. This is on an impulse wave, okay? The volume, look right here. All right? I'm just going to zoom out for you guys to see. Okay? This is what an impulse wave volume looks like right here. Do you guys see it? This is nothing, guys. This volume is tiny. In fact, the volume is almost non-existent. So panic not, my friends. Not only that, I want to show you guys the RSI, okay, on the higher time frames. On the 4-hour time frame, okay, it's way too high, guys. Notice that it peaked right here, and then it came down. Okay, let's look at it closely, okay, guys? Notice that the RSI peaked, and then it came down, right? Right here. So I'm just going to draw it from top to bottom so you see. To about right here, you can say. This is where the bottom pretty much was. And then it went all the way back up and it peaked. Well, it needs to do the same thing, guys. It needs to do the same thing. And then it will make a third peak, okay? But how do you know, first of all, okay, guys, that this is the second wave? If we draw a line through straight, what do you guys notice about it? It is bearishly diverging, right? It's not going upwards, it's coming down. Overall, it is absolutely going up, but it cannot go up any higher right now before a small correction. And I also want you guys to make note of this right now, okay? Over the 4-hour time frame, this is called the histogram. The histogram is getting smaller and smaller, right? It's getting lower and lower. Right, guys? That is how we confirm, without panicking, what is actually going on the bigger picture. Now, guys, I know that looks like it's going up right now, okay? I know it looks like it's going up right now. But you guys have to make note that the first one took 1 day, 16 hours. And we're going to use it as a basis, again, okay? For this one, that's going to take almost as long to correct. You guys need to remember that for every single, excuse me, for every single motive wave, okay, guys, a really big impulse that goes up like this takes a long time to correct, guys. You need to make note of this shooting star that shot up, okay? This is because this is called a shooting star. I'm going to show you guys it, or a doji, whatever you want to call it. Shooting star candle, okay? This is a shooting star candle right here, guys. Every time you see a shooting star candle, there's a downtrend, okay? It's a very, very powerful candle, right? Or some people might call it an inverted hammer. Let me show you guys an inverted hammer. Okay? Nope. Let's say on an uptrend right here, okay? Shooting star / inverted hammer, okay? That's a reversal candle. And you guys need to make note of this specific candle right here before you panic. All right, and you also need to compare it to this volume, and you also need to make note of the 2-hour MACD as well. All right, this one is only spiking up a little bit, and we're gonna get into what is going on, guys. Just because it's a big green candle doesn't mean it's going, oh, look at this, it's getting shot down already. It's getting shot down already. So what this means with this large green candle, guys, doesn't mean it's uptrending. What it means is there's just a large spread, okay? You know, a large spread, a large price difference. It doesn't actually mean it's going to be going up, okay? And we're going to analyze this very further, or much further. So we just draw a line, first of all, diverging, okay? We draw a line here as well on, say, a 4-hour chart, 100% diverging. You guys would agree with me here, okay? We are in the oversold zone right now, okay? How did we know after this wave 1 finished? Okay, this wave 1 finished, it was losing strength. Easy, you just draw a line through it like that, okay? Right, and here it bottomed out eventually. Sure, it made a few ticks, right? And it bounced back up a little bit for a correction. But there's no doubt in my mind right now, guys, that we're still in corrective phase, okay? You guys have to remember that for every big run up, there's always going to be corrections, okay? Imagine running for a long time and just resting a little bit to take a break. This large candle does not indicate at all, guys, that it is an uptrend, okay? So don't have that fear of missing out. Okay, guys? Don't. We bottomed out right here. Yes, we did. And I'm going to draw it out for you guys. And some people might think it's an uptrend, right? But let's go over this in detail so you guys can really understand the logic behind a newer trader and someone who does this professionally for a living, okay? I do this professionally for a living. If you guys know me by now, I work 16 hours a day, right? I release tons of video content. I tweet all day because I want you guys to learn as well. I want to impart my wisdom as well. Okay, guys? My dog and I, Luna, we have made a commitment to help the cryptocurrency community, and that is what we're going to do, guys, okay? Whenever there's an uptrend, gentlemen, let me just show you something, okay? Whenever there's an uptrend, you don't see long wicks poking up and then rejecting. What you see is long wicks poking down and then rejecting, right? Let's go over for a real uptrend, okay? Do you guys see a lot of wicks being rejected? Downwards? Yes. Do you see a lot of wicks being rejected upwards? No. Make note of this 1-hour candle right here, guys. That was a shooting star. Okay? Bam, it got rejected and it went down. Okay? Look at on this uptrend. There's not a lot of candles, right? There's maybe this guy right here rejecting, coming down. But now you guys need to make note of these candles right here. Look how much times it's being rejected. You know why it's being rejected? It's because a lot of newer traders are in the market thinking that it's going to go up. But the people who are experienced in the industry, and they know much better, right? They create that panic amongst the buyers. Oh no, we're going to miss out. So they just keep buying into it. And then what ends up happening is they get dumped on, guys. And that's the battle between the bears and the bulls. Now, do you guys see this 1-hour candle that just formed? Do you guys think that that's a green candle? That means it's bullish? No, it's not bullish, guys. Whether it's a green candle or a red candle, in particular situations, it doesn't matter, guys, because all that matters is the type of candle that it is and the psychology behind it. Okay? I'm going to show you guys what an inverted hammer is one more time, okay? An inverted hammer is something like this, okay? It can be red or green, right? This one's slightly more bullish. This one's slightly more, or sorry, this one's more bearish. This one's slightly less bearish, okay? But the psychology behind it is this. The bulls tried to push it up, but by the end of the candle close, it gets rejected and shot back down. Let's see how it looks on a 2-hour, okay? On a 2-hour, it's a powerful candle. It's a really powerful candle. Compare the volume. Would you guys say this green candle's volume is about it's about a third or a quarter of this previous candle? Absolutely. But we're already halfway in. So if it was an uptrend, why would it not be at least half? Because since we're halfway in the time, 1 out of 2 hours, right? Why would it not be much bigger than that if it was an uptrend? Why is there getting rejection for 3 cents, right? So we're gonna go over this in really fine detail so you guys really understand what is going on, all right? Okay, let's go break this down a little bit some more. First of all, we're gonna draw some pictures. I love pictures, guys. I love pictures. This is where we were, right? 1, and then we finished wave 2 already, and then we finished wave 3 with the massive one, and we're currently on wave 4. Okay, so we're on this particular wave right now. Okay, now what we have so far in this particular wave, normally what you have is an ABC correction like this, A, B, C. But we have to assume a few things. We have to assume that first of all, this point A only touched the 0.5 Fibonacci level. And then the point C, which will, we'll call this guy C. We'll take this one. The next lowest one was actually 382, okay guys? The 382 level. So it hit one level here for Fibonacci. Fibonacci, Fibonacci, Fibonacci. Okay guys? So then the next one hit 382. Now I want you guys to count with me right here. 1, okay, we'll just call this one, and we'll go 2, and we'll call this one 3, 4, and 5, okay? Now, within this wave, what we actually get is basically at that kind of pattern. We get a 5-wave structure within the 3-wave structure right here, right? Now, I want you guys to count this with me. What do you see? This is going from A to B. We're going to go from A to B, and how many do you guys count? 3 waves, okay? So 1, 2, 3, 4, 5. Actually, we're going to call this one A, B, C, D, and E because I prefer those better. A, B, C, D. Okay, guys? And then inside of here, we have the 1, 2, 3, 4, 5. 1, 2, 3, 4, and the 5, right? Once again, answer out loud to yourselves, guys, so you guys learn. It's important to say things out loud sometimes if you would like things to stick more, right? Kind of like when you meet someone new, you say, hey, John, nice to meet you. You repeat their name once or twice, and so it sticks to your brain. So from waves A to B, how many waves do you guys count? 1, 2, 3, okay? Now, let's go over here. Now, we are to wave A here. If we count A, B, C, D, and E to here, then check this out, guys. We go into a better time frame. We can count 1, 2, 3, 4, and 5, right? Check it out. 1, take the next low, next high, next low, next high, and bam, what do you guys get? You get a flat inside of it. You get a 5-wave structure with inside of wave C. Do you guys notice something very similar in here? Look. A, B, C, D, and E. This is where A is. You guys probably can't even tell which time frame we're looking at right now, I bet, right? Because it looks so similar. So we have A, B, C, D, and E. And from waves B to C, we have 1, 2, et 3, 4, et 5, messieurs, mes amis. Comprendez? Okay, so we have 1, 2, 3, 4, 5. And within B to C, we have 1, 2, 3, 4, 5. Make sense, guys? Awesome. So what is going on right here, guys? Well, if B over here had 5, or sorry, A to B had A, B, C, then A to B should have A, B, C as well in here, right, guys? Does that make sense? Isn't that a beautiful thing? So we're going to draw it out, okay? Now this one, C doesn't always have to get to that high, okay? But we're going to actually draw it from right here. Now, you guys might be wondering, well, okay, this might get a little bit higher. The highest it can probably go is to about 178. And how do we know that? Okay, now I want to show you guys something. Okay, A going up, how many waves we had? Or sorry, sorry, give me one second. All right, guys, so check this out. In this particular wave right here, right? Right here, it's really hard to see unless we zoom in to a different time frame, but I really want to make sure that this is drilled in everybody's head. I don't even know which time frame we're looking at now because it looks so similar to me just based on pattern when I'm doing that, okay? Okay, check this out, guys. We're going to zoom in, Really close. This is a 3-minute time frame, okay? We're gonna count the waves. How many do you guys count? 1, 2, 3, 4, and 5. So within this small A right here, we have 5. Now check this out. We have A, B, and then C for this one, okay? And this one ended up making a really weird pattern, like a really different kind of pattern. So I might actually just end up moving this one over to here, moving it like that, and we're just gonna make a super tiny wave like this. Actually, I know that's not right either. Okay, hang tight. What this one ended up doing was this. For the final wave C up, okay? It did 1, 2, 3, 4, and then 5. You can barely see it, right? But this is the 5th wave here, which is called a truncated 5th wave. Let me Google, or not Google, I'm gonna show you guys my little handbook here. Don't ask me how I know how to find these things. I just know. Truncated 5th. That's what it is, okay? The 5th wave of an impulsive pattern that fails to exceed the price extreme of the 3rd wave, okay? Okay, so this is basically what a truncated 5th wave looks like. We have 1, 2, 3, 4, and then 5. It barely breaks it, okay? Would you guys say that's the exact same thing? We count 1, 2, 3, 4, and 5. Cool. So now we know, guys, right? That's a truncated 5th, and they do exist in these charts. Now let's see a thing of beauty, okay, guys? We're gonna see a thing of beauty in here right now. We're gonna call this basically wave 1. Okay, 1. Okay, you guys following? 2. We can call this one 3, 4, and we can call this one 5, right? But that one doesn't actually fit the requirements of an Elliot Wave combo, okay? Because this price range right here is probably less than this price range. Now, don't like it. See, the 3rd wave has to be the strongest. So when we go back and we look at history, we can assume that this is just an extension of right here, okay? And this one will actually make an A, B, C in here. And that's how we can confirm it. We have an A, we have a B, and then we have a C point right there, okay? Bam! That's how we know that E officially ended here instead, rather than there, okay? Now watch this, guys. When you look on the 5-minute chart, people might say, oh my God, we only have 3 waves. 1, 2, 3. Where's the 5th and the 4th one? But now let's zoom in on even more detail as pros do it, guys. I'm in my sweats right now. Who am I kidding? I'm in my underwear. Professionals don't wear jeans or sweats, guys. They just sit in their underwear all day on whatever day it is today. Sunday? Thursday. I'm close, guys. I'm just kidding. I knew exactly what day it was, okay? So we're going to do this, okay? Check this out. 1, okay? 2, 3, 4, and 5. Just a little bit higher, right? If you look on that time frame right there, where we have like that, 1, 2, 3, 4, 5. Well, check it out, guys. We also see it on other time frames as well that happen. For example, this one right here, right? See, look, you guys can barely see it, but 1, 2, 3, 4, 5. So this is how we're finding patterns that emerge, okay, guys? And look at this right now. It's getting rejected pretty hard already. Like, remember how I was talking about how it just keeps getting rejected? It's not an uptrend, guys. Look at the volume. Look at this volume for a downtrend, okay, guys? Let's first of all look at this downtrend, how hard it got rejected, okay? We're already 1 hour and 10 minutes into this candle, which is more than halfway for the 2-hour chart, and it just keeps constantly getting rejected and rejected. And if you look even closer, that's how we can confirm it. So anyways, so guys, we're gonna do this now, okay? Now that we know that this is wave 1, I'm gonna actually take away a lot of our lines here. We're gonna draw a big wave here. So we're gonna take out this channel as well, okay? Gonna take out this channel just to keep it actually, yeah, sure, we'll take all this out. And we're gonna draw a line. We'll make it pink. Now we'll make it teal, whatever that color is, like that, okay? This is now our A wave right here, okay? Now, we use Fibonacci. We use Fibonacci, guys, and then we use targets. Do you guys remember how I said last time that it was going to hit somewhere between, let me pull up the photo for you guys again. I said it was going to hit somewhere between the 382 and the 0.5 level first. Well, that was just one target. And this one here, B, might not have ended here, okay? And the reason why is because we just shot for that target first originally. But because of the strength of the first 5 waves, we're now actually going to shoot for maybe a 618 level. But look at this, $1.07, $1.12, okay? $1.12, okay? Do you guys see this? $1.07, $1.12. Hey, so that would have been a really good region combined with where I suggested to buy earlier as well. So now that we know right here that this is now wave A, okay? So just to show you guys what I'm talking about, when we go back to a different time frame, we have A coming down here, right? We have A coming down there, and now we are working on wave B going up, okay? Wave B going up, and then we work on wave C coming down. So check this out, guys. We have wave A going up, 1, 2, 3, 4, 5 as well, okay? And on this one, how many do you guys count as again with me? We have, I'm going to delete the small ones so you guys see it. We have 1, whoops. My bad, give me 1 second. Okay, there we go. So we counted the first A going up here, right? 1, 2, 3, 4, 5 in there. And now we're going to be working on the B. Does that make sense? So we have A, B, C from waves A to B. So in here, we're only on wave A, okay? Right? And B ends somewhere over here. So this one, we're going to call it a tiny, tiny little A. A. Okay, does that make sense? So we have 5 waves within wave A, and then the next one coming down, which we can draw already. We can draw maybe right here somewhere. It's going to be a big guy. So within this one coming down, let's go take a look at the other one to see how many we counted on the small b coming down. Okay, on the small b coming down, right here, we had A, B, C, okay? Now let me show you guys this. This one is bigger because it was much more impulsive, right? So this one here, we're actually gonna have an A, and an B, and a C, something like that, right? That is pretty much what we're gonna end up having. 5 waves going up, 3 major ones coming down, right? Now, it might not actually show up, get to right here. It might only get to right here, like that. So now this one, we can actually call it wave B, like that, okay? And now what we're looking for is the final one. We're gonna do it right here like this. So this is A, this is B, and now because we hit this target level, one of 2 things is gonna happen now, where B ends. We're gonna get one more wave up, like that. You know what, for all I know, just so you guys know, I could be entirely wrong on my wave count as well, okay guys? So that is actually really important to make note of. Hey, look at that, someone dumped it. Someone dumped it really hard, like, since I've been making this video. I gotta go check it, I'll be right back. Okay, sorry about that, guys. But I want you guys to know something, that I could be entirely wrong in my wave count, all right, guys? I could be entirely wrong. And the thing about Elliot Wave is that you don't know if you're actually right until hindsight mainly, okay? But since we've been making this video already, I've been filming for a while, like someone literally dumped it all the way to 102. And I actually missed closing my short position. I should have, I actually shorted it from up there somewhere. And I had a target actually of like $1.01, but it's never, I missed my chance to close it. But so I just had to go set my stop really quickly. So are you guys following what I'm saying? I really hope that this makes sense, because in my mind it's like crystal clear. So what we do now that we have this particular point almost done, we're gonna assume that it gets to, you know, somewhere like right here maybe. somewhere like right here. Actually, you know what? I might have been entirely wrong. A, B, yeah, I was definitely wrong. Okay, we're gonna redo it. Okay, we're gonna go here. We're gonna use this as point B, and then we're gonna use this as point C. And the reason for that is because I forgot that we actually counted this as the fifth wave. So when we do our A, B, C correction coming down, it's just like this: A, B, and C. That's it. Okay, that makes sense to you guys? So once again, from wave this one to A, we have our A, B, C, D, E structure. From here to B, we'll call this way up there. From this one to A, first of all, we have 1, 2, 3, 4, 5. And then from A to B, we have A, B, C, okay? And now this one's actually really, really, really freaking weak here. It could barely even get any strength. Usually what we do is we take our Fibonacci extension tool, right? We go from here to right around there, and then we go to here, and then we try to target 1-to-1. But this one, it's got no strength at all, guys. It's an incredibly weak right now going upwards, okay, guys? So we might not even hit it. And what we usually do is try to take a 1-to-1 ratio of up to here, but it doesn't seem like it's going to hit it. It seems like it might actually only hit like $1.12 again, or maybe $1.16 at most, okay? So assuming that it only hits around here, and we're going to count this wave right here, okay, that's basically 1. Actually, this is more like 1 right there. 2, and this looks like it's 3 actually. This looks like it's 4, and it actually looks like it's done already. Wow, just counting it, it honestly looks like wave B is done already. That's crazy, or wave C rather. It's just getting no strength at all in the very last one, and the market has spoken. Looks incredibly weak. All right, so let's call this C right here, okay? Let's call this C right here, and assume that this is where the final one ends. So once again, we're gonna draw this line here to make it very clear for you guys. Let's use freaking yellow or something. Okay, and I'm gonna make this one yellow as well because it's very visible. So once again, we're gonna go over that, okay? From to A, we have A, B, C, D, E, okay? And now this could be called point B right here. Point B, okay? And now from A to B, now from points A to B up here, usually this one would have a lot more strength, something like that. But just from the way it looks right now, and from our wave counting, it looks like we have 1, 2, 3, 4, 5, which forms point A, and then we have A, B, C, which forms point B, and then to point C up here, or where B ends, we have 1, 2, 3, 4, 5, okay? That's what it looks like to me. I could be completely wrong, but you know, when we go back to the previous one as well, it actually looks almost identical, right? Like from what we've seen as well. Coming down, we have A, B, C, D, and E. Going up, we have A, B, and C. So these ones had a lot of volume, right? Check out this volume spike on the way up to B. Check it out, right there. But we're not seeing that right now at all. So I have no reason to assume that this is on an uptrend at all, okay? So based on everything I've indicated, not only that, last one wasn't even that strong of an uptrend. This one's massive. That one took one day, 15 hours to consolidate. Why would this one be anything shorter than that? Because it was more strength. You guys have to consider that something that has a lot more strength takes a longer time to consolidate. If this was actually a breakout, we would actually see well above that price already. Wouldn't you guys agree with me? Right? So can we actually assume it's a breakout? I mean, let's go over this one more time, okay, guys? We have the MACD. Doesn't look like it wants to go anywhere, right? It just wants to go sideways and maybe come back down. And this is on, oh sorry, let's go to a higher time frame, like a 45-minute chart. okay? We look at the MACD, right? It might cross over just a little bit to finish that last point B, but once again, we take a line across it, bearish, absolutely. On a 3-hour, way oversold. It needs to come down like here, like I mentioned. And then we make our way up again. But what we notice is that, right, draw a really big line across it like that, and you can tell right away that it's bearishly diverging because it's more aiming down. This one's probably got a really good chance to do that. So this is how we can use RSI as well to gauge, guys. See, notice that how this is leveling downwards. We look at it really close. It's actually ticking downwards for every 3 hours. And on the 4-hour one, it's absolutely ticking downwards, right, over time. Do you guys see what I'm talking about? And that's how we can confirm on the histogram itself as well, where the general trend is going in the next few hours. What we can confirm is that everything is entirely oversold right now, guys. It is so oversold right now. So I'm a conservative trader. I have no reason to think that it's going to go up right now until it actually starts uptrending heavily. So what I'm led to believe is this, okay, guys, is that this is point B. We're going to remove all these ugly things. It's just too much going on in my charts sometimes, okay? Okay, this is what we see, and there's nobody that would disagree with me that this is what we see. We see, first of all, that it can barely break above 0.5 Fibonacci, okay? Now, if it broke well above 618 Fibonacci, that means there's a good chance it might try to go for 718 and even retrace all the way back to 1, right? That's how Fibonacci's level work, okay? That is exactly how Fibonacci levels work. And if we actually look at it on the grand picture as well, on the downtrend way, let me show you guys, right? I took Fibonacci from these points right here, from where point 2 finished to where 3, or point 2 started to wave 3 up there. And then we notice right away that Fibonacci only bounced off of 618, guys. Meaning on the uptrend itself, okay, guys? On the uptrend itself, when it was correcting, there was a lot of panic around the 618 level. Around the 618 level, that's where a lot of people will put in the buy order, okay? And you could have actually easily confirmed to go long there, like I mentioned. How did I know? I drew a line like that. I drew a line like this, okay? I saw it wedging. I counted A, B, C, D, and E. I'm like, okay, there's a wedge right there, resistance. There's a support right here, and there's 5 waves. So all that I did was I just drew a little green box. Like you guys saw, I drew a green box. I indicated that's a really good buy zone, right? And then you would do your risk to reward. Long position, you would enter, say, around there, right? You would shoot for 0.5 Fibonacci level like I suggested. This is how I made my target. So I made some pretty good money on there. I shot for a target of between 107 and 112. So for my particular risk to reward, it was amazing. It was 3.92 risk to reward right here. How do you calculate risk to reward? Easy. You take the price of the top area divided by the price of the bottom area. So you take the price of where your target is minus the price of your entry, and then you take the price, divide that by the price difference of your entry price to your stop loss. So I set my stop loss around, it was about 88, 89 cents, and I was shooting for about 112. I sold mine at 107 instead though. That's fine. I'm pretty happy with that. I ended up making about 18.90 cents on a few thousand coins, which really, really adds up if you guys know what I mean, right? So that would have been a perfect opportunity for anyone who followed my chart to go in there. Now we are going to shoot for maybe 618 level to finish our C. Maybe, maybe not. Maybe this is the actual end right here already. We just don't know until we know. So people might have entered a long position from up there. I entered a short position from up there because I'm expecting it to come down a little bit more. So let's say even if it went up there, we're going to take best case scenario. If it went up there, we're probably going to get, remember earlier I said that on the 30-minute chart that this guy right here, guys, went to 0.5 and then the next level was 382. Well, if this one went to 0.6, then the C target that we might assume will be 0.5 over here. But it's not going to be like, it's going to take a long time, guys, to get there. Trust me, it's going to take a really long time. We're going to pull it all the way up over here because we're also going to assume the same amount of length for correction, okay? I'm going to assume it's going to get to about, sure, we'll say the next target that it might hit is right up here to finish our C wave, okay? I'm going to delete this, I'm going to delete this, delete that, delete that. So let's say this actually got up to there. Fibonacci level, the next Fibonacci level. So the next target that it could possibly reach, in my opinion, is right around maybe there. Okay, I'm actually gonna, excuse me for a second, I'm gonna close my short position. Okay, I am back. Cool, just made a good profit right there. I want to make this, I shorted it from like 112 or so. So I took a 5-cent profit just now, but I'm happy about it. So let's talk about the different cases that could happen. This could be a target area that the next one could hit right now for the people that went long from here. Because in these patterns, okay, from down here, we have 5 waves always, or A, B, C, D. And then from A to B, we always have a 3-wave correction, okay? Always 3-wave, no matter what. That is just the rule for Elliot Wave, just like this. 1, 2, 3 from A to B, okay? Still getting some rejection. Volume is really not that much yet, but it's increasing slowly. So it looks like we might be just creeping our way up to here. Or we might even creep up to right over here. But that's almost the most that it could go up to. So this right here could be a perfect opportunity for the people shorting. And we're also going to assume the same distance, okay? So just assume it can go, this one here could end up at the 117 or 112 again. And at the same time, we're going to assume the same correction where if that one earlier on the left that I showed you, it finished at 0.5 and the next bounce was 382, then we're going to assume the exact same thing where if this one finished at 618, then this one here is going to go to the 0.5 level before it uptrends. And this one will take a long time, guys, okay? It will take a long time. We're looking at basically November 3rd. When is that? November 3rd is tomorrow, guys. Tomorrow. So it can go up to here once again to the 112 level, or it can go up to the 117 level right here. This is just all based on Elliott wave theory, okay? And this is on the 30-minute chart that I'm looking at right now. It might slowly creep its way up there, okay? So these are the targets that it can go up there. And just based on market psychology and how Elliott wave theory works, it has to make these corrections. It has to make an ABC correction, guys, no matter what. It has to do it. It's impossible for it to not do it and just to skip it. Here, it made an ABC correction as well. Okay, guys, it made a 1, 2, 3, 4, 5. I'm going to count it for you. Actually, I like the A, B, C, D, and E. A, B, C, D, and E, right? We have A, B, C, D, and E coming down with subwaves 1, 2, 3, 4, 5. And then we have A, B, C going up from A to B. And then from B to C, we have A, B, C, D, and E again, okay? Now, why wouldn't these ones do the exact same thing, guys? History tends to repeat itself. So what I'm going to predict is A, B, C, D, and bam, right here is going to be my buy area. Right around here is going to where I'm going to go so long, guys, just based on my logic that I'm using, okay? And who knows if I'm going to be right or wrong? You just simply don't know. Okay, I can't even click on this right now. This number 4. Oh, yeah. Okay, there we go. So I'm going to target this specific area to go long. My buy zone will be anywhere between, we'll say, 93 cents and 107. This particular region. I'm going to short it up here 100%. Now, I don't give financial advice, guys, so please, please, please remember that always, okay? I don't give financial advice. I'm simply telling you guys from my perspective what I plan to be doing, okay? So please understand that. So based on all the Fibonacci levels, this is a really good target for the people that shot from here. That was target 1 right here, which it actually hit that I defined. But now because of the strength of it, I was wrong in not assuming it could go higher. So anyone who entered from here, really good target. Okay guys, that's how it works. And then I'm going to short it from B, and then I'm going to get it to this C region right here. No matter what, I'm going to short it. If it gets to 117, I will short it. I will keep accumulating my shorts all the way from 112 to 117, and I will short it. And then I will close my position anywhere between 107 and 93, depending on the strength of everything. Because we have to play everything by ear, right? We have to make sure that we really take into account everything. Usually what a typical ABC correction looks like is this, guys. Okay, this is a typical ABC correction right here. We have 1, 2, 3, 4, 5, then we have A, B, C, right? But sometimes you get a truncated C like I've been talking about. I'm going to try to find it for you guys. I go through this book a lot. I think I've read it like 20 times. It's a few hundred pages. Really, really good book. I use it as a good handbook. So here's a normal A, B, C correction, but sometimes you get a different kind, okay? Sometimes you get a flat. You have an A, B, C, okay? That is a flat where it doesn't quite break lower than A because of market sentiment. And sometimes you have even this kind as well. You have this one here. It's called basically just a truncated C flat where A, B, C, where it doesn't quite break it. And if you guys take a look at A, B, C right here, where C does not go lower, well, take a look at this point right here, guys. A, B, and C, where C does not go lower, right? So everything I'm saying is not FUD. Everything I'm saying is not voodoo. What I'm doing is using technical analysis of Elliot Wave theory. And this is a really different kind of theory that what my people might be used to, right? I know you guys are used to seeing a lot more basic type of analysis, right? But I'm giving you guys the cat's meow right now, and I'm going to be releasing a lot of these videos. So if you guys like them, just subscribe. I do this full time in terms of day trading, right? I probably trade 8 to 16 hours a day. I find it like a complex video game that I'm just addicted to because it's so fun to look at these charts all day, okay? And I realized a few months ago, hey, why don't I just start making these videos and tweet about it as well to help people out? And that's exactly what I'm going to be doing, guys, all right? So based on targets, I mean, and what I showed you, sure, maybe C could go down right here. Okay, we're going to use exact targets. We're going to use Fibonacci extensions and assume that it gets to the worst case scenario of the 618. So realistically, our C, if it was 1-to-1 ratio, could actually end up over here as well. So I'm going to be conservative. Okay, guys? I'm going to be conservative. I'm going to be conservative and assume that a good entry point will be anywhere between 76 cents. That's right, guys. 76 cents based on a 1-to-1 ratio all the way to 107. But these are just rough targets that we must understand, okay, guys? They are rough targets, and everything we do, we play it by ear, okay, guys? Let's assume that we get the exact same downtrend. Usually from B to C, like B to C right here, we actually get a very similar structure to this guy right here, believe it or not. So we could actually get something like this as well. And check that out, guys. Do you guys see the voodoo? Check out the voodoo. Exact same time frame. 1 day, 15 hours. This is not coincidence, guys. This is not coincidence at all, I assure you, okay? How these time frames are laid out. Does that make sense to you guys? This is not voodoo. This is just assuming based on history. No, I'm not saying that like I'm good or anything. I'm saying that this is the science, the way we're analyzing it, okay? And that's really important to understand. On another topic, you guys know what's voodoo? Seriously, the way my box of chocolates with like 120 pieces in them, it just vanished. I think they all went into my stomach. So if this were possible, this is one scenario, one, A, B, C, D, and E, if it followed this one right here. Another scenario, right, is anywhere between 0.5 Fibonacci level, or even it might just get literally a double bottom right here. This is why, guys, I'm taking the most extreme possible cases. And as a trader, what we must do is look at the best and the worst possible cases, okay, guys? That is really important to do as a trader because we have to evaluate what phase we're on, and we also have to plan our entries and we have to plan our exits, okay? So I spend a lot of my time doing TA because it gives me a rough idea of where my next entry will be and where I can close my positions. So that is exactly where we stand right now, okay guys? And now we're also going to take our worst case scenario. So the best case scenario, not the best, I won't say best or worst because that depends on if you're bullish or bearish bias right now. But right here, if it ended right here, that would be the 382 level. If it ended right here, it would have did a one-to-one retracement, okay? So now what we're going to do is this, now that we have the green box there, of worst and best case depending on where you're from or what scenario you're in, okay? So we're going to take our fib extension, all right, guys, from 2, and then we're going to do 1 from here, and we're going to assume a one-to-one ratio. So the first target is right here, assuming that it retraces back to the 76 cents range, okay? All right. And now the next scenario will be, we will take this one and assumes the best case scenario where it doesn't retrace far at all to say only right over here because that's still the lowest point, okay? Now we're going to go up and we're going to go to one-to-one. Boom. That is our possible ranges, okay? So the lowest it can possibly go based on TA is about 76 cents. The highest it can retrace to, just based on using the same theory where C doesn't retrace that far to 382-ish, right? This is the best case scenario of it not retracing far again, is about $1.06, okay? Medium case scenario, about 91. My goal is to be about the 91 cent range. Now, if it went to the lowest range at 76, then the highest that it could possibly get is about $1.32, okay? Again, as a one-to-one ratio. But if it retraced to only 382, which is the best case scenario, where it doesn't retrace as much, then it could actually go to a target of $1.55. And then we will actually finish our official wave C coming down. So we'll just put this in the middle, and then this will go up to there. This is just guessing the time, it's random lines, okay? And then officially, we will have finished, guys, this. We'll have finished our waves 1, 2, 3, 4, and 5. And then what happens after that? Massive correction, guys. Massive, massive correction happens, okay? That is what's going to happen after. How far can that possibly go to? Okay, well, we'll take our Fibonacci, and we'll assume the best case scenario. Okay, best case scenario, it gets really high. Then we're going to assume it goes somewhere between 0.5, 618 there, or 0.5 and 618. Now the worst case scenario is this one right here, right? That's the lowest it can possibly go based on previous targets. And then we'll do this. So if it reaches anywhere in this green box there, then what will happen is it'll correct pretty heavily to $1.03 to 84 cents. Now why does this need to happen, guys? Because people need to take profit. And there's liquidity, right? The demand will absolutely dry up there. People need to take profit because there's only a certain amount of coins that are available. If you look on the daily chart, we are skyrocketed right now to an absurd RSI. This needs to come down just a little bit before we start our next run. Now, let's take a look at this again, okay? Let's take a look at here. What happens afterwards? Well, this is actually going to be called the grand primary, right? This is actually going to be wave 1, we're going to call. Okay, 5 ended there. We'll call this one wave 1 of the grand primary cycle. Okay, let me show you guys what oh, we don't want that. Okay, This is going to be wave 1. And there's many different waves, as you guys saw within waves, right? Now I'm going to show you guys what I'm talking about when it refers to waves. Okay? I'm going to call it, say, the super cycle, we can call it. So there's many different wave degrees. 5 with the trend, 3 against the trend, right? 1, 2, 3, 4, 5 for impulse waves, and against the trend is always ABC. So, and they're labeled differently. And now we have 1, 2, 3, 4, and 5 waves in there, okay? And this will be right here, okay guys? This will be wave 1 that we call it. And this one right here will actually be called wave 2. Now what you guys want to catch is wave 3. And if it's any indication of how strong this wave 3 was, okay? Now let's say we land somewhere in there. We're gonna get into more detail and see how far it can go. Okay, worst case scenario, going to a 1-to-1 target. Our next target will be $1.90, okay? We're just gonna put it right here. And now the best case scenario, if it only retraces to about right there, just drag it up there and assume a 1-to-1 target as well, right here. But what we do know, guys, what we do absolutely know is that wave 3 is always stronger. It's always stronger than wave 2. Or wave 3 going up is always stronger than wave 1. So now what we're gonna do is we're gonna take even more ranges, okay guys? Let's say that we took the worst case scenario up here and it actually went to right here. And now let's take the best case scenario where it only retraces to about that point. So these are our realistic targets. And I'll just draw a box to overlap it. And now that we have a lot of information, I can actually predict sort of what area. So as soon as we get to this particular point up here, and then we correct it down there, if there's still a bullish market sentiment, and not just market sentiment, but EOS bullish sentiment, there's continue to be good release of news, etc. Guys, we could be looking at worst case scenario for end of wave 3, $1.90, best case scenario, $2.70. Now this is just long-term forecast with the very limited of information I have right now, but we can keep going on and on and on about this as well. But what we need to understand right now is that we're still trying to figure out if it's going to make it to this point B or not, okay? But once we make it to B, we're going to start our downtrend to C. Now keep in mind that this is just my opinion, and of course, for all we know, this could actually be the start of wave 3 already, but not likely, guys. If this tiny little wave over here literally took a day and 16 hours to consolidate, there's a good chance that this one's going to take the same amount of time as well, if not even more. So I hope you guys enjoyed this price forecast and Elliot Wave analysis that I've done. I release a lot of these videos throughout the day. Whatever coin I am trading, guys, it's in the books. Trust me. Look at this volume from wave 2 to 3. Once again, check out the volume, guys. Do you guys see an increase in volume right now, or do you see a decrease in volume? Tell me right now. What do you guys see? You guys see a decrease in volume, right? Liquidity, it's drying up, guys. Liquidity is drying up right now. Volume is drying up. It's actually getting lower and lower and lower. This is not an uptrend, guys. Trust me on that. So we have evaluated that the MACD is diverging. We have the histogram is diverging. We have evaluated the relative strength index excuse me, relative strength index, or the RSI, diverging as well, right? And we also talked about every single case scenario, right? So I hope you guys enjoyed this video, and I'll see you guys later in the day when there's more news. I promise to release a video when it hits this point B right over here between my targets of $1.12 and $1.16, because I will talk about the short position that I've entered. So guys, we have 1, 2, 3, 4, and then we're waiting for this badass right here. This is the last one, okay? And how do we know that it's going to make one more? Let's go look on a 2-hour chart. We only see 2 peaks, like I keep mentioning, right? We see 1 peak there, and we see a bottom. We see 2 peaks there, right? Right here, and or this one will actually go lower to probably about right here, and then we're just going to see another peak. If that one took that long to come down, this one could take almost as long as well, right? And then we're going to get one more spike right up there. It's going to be lower, Every time it gets lower and lower for the waves. That's how professionals look at Bitcoin actually. They look at the relative strength index to see if it's even possible to have a few more waves up. Okay? And this one will probably be a little bit lower as well. After that, you just draw a line through all of them, and you will at 100% notice that it's diverging and coming down. Okay? So, I'll see you guys in a bit, alright? Have yourselves a great day.